Ever feel like the investment world is just way too noisy? So much jargon, so many hot tips changing every week?
Oh, absolutely. Information overload is real.
Well, one of our listeners actually brought up wanting to sort of cut through that noise and understand Warren Buffett's approach better.
Right. A much more, let's say, consistent voice in investing. So for this deep dive, we've looked at some key ideas from Buffett.
And mission today.
Simple, really, to pull out the core principles, give you the essentials of how he thinks about investing without all the fluff.
Okay, let's jump in. The big term you always hear with Buffett is value investing. What's the nuts and bolts of that?
At its heart, it's about buying a piece of a business for less than you think it's actually worth.
Like finding a designer coat on a clearance rack.
Exactly like that, yeah. But Buffett isn't just hunting for any bargain stock. He wants solid, strong companies that the market, for whatever reason, has temporarily marked
So
down.
it's not just a low price, it's a low price relative to its real worth.
Precisely. He wants a significant discount on what he calculates the business itself is worth.
Got it. And that sounds like it requires, well, waiting. This isn't about quick flips.
Definitely not. Patience is absolutely fundamental. Buffett thinks in decades, not days or months. He's looking way past the next earnings report.
Right, focusing on the long-term health of the company.
It's all about sustainable growth over a long period, ignoring those short-term market jitters.
But hang on, how does that long-term view square with, how fast things change today? Tech disruptions, new competitors popping up.
That's a really good point, and it leads straight into another core idea. You have to understand the business you're buying thoroughly.
It's not enough to just like the product or see a low stock price.
Not even close. You need to grasp how it makes money, what keeps competitors away. He calls this the economic moat who's running the company. Really dig in.
Okay, so that deep understanding gives you the confidence to stick with it, to avoid panic selling when the market gets choppy.
Exactly. Buffett says emotion is basically the enemy of good investing. If you genuinely understand the company's value, you're much less likely to react impulsively based on fear or, greed.
It acts like an anchor.
Sort of, yeah. Or a compass guiding you when things get confusing.
Now, something else interesting is this idea of focus. I remember hearing Bill Gates talk about focus being key to his success, too. How does that apply for Buffett?
Well, it's about concentrating your bets. Putting your money into a relatively small number of companies that you understand extremely well.
Instead of spreading yourself thin across dozens, you only kind of know.
Right. Stay within what he called your circle of competence. It allows for deeper analysis, more conviction in your choices, quality over quantity.
Makes sense. And then there's compounding, the eighth wonder of the world, supposedly.
Ah, yeah, Einstein might have said that. It's just powerful. Your returns start earning their own
It's
returns.
a snowball effect.
Exactly. And
Yeah.
because Buffett invests for the very long term, that snowball gets huge. Compounding needs time to work its magic.
Okay, so value, patience, understanding, keeping cool, staying focused. But what about risk? How does he protect the downside?
Ah, crucial point. He talks a lot about the margin of
The
safety.
margin of safety.
Yeah. It's the gap between what he estimates a company's intrinsic value is and the price he actually pays for the stock. He wants to buy it significantly cheaper than its true worth.
Building in a buffer zone just in case.
Precisely. It protects against errors in judgment or, unexpected bad news. Think of it like building a bridge designed to hold 15,000 pounds, but only ever driving a 10,000-pound truck across it. That's your margin of safety.
That's a great analogy. So this is all incredibly practical stuff. For you listening, trying to figure out your own path, maybe apply some of this.
Yeah, it really makes you think which of these ideas, value, patience, really understanding the business, controlling emotions, focus, compounding, that margin of safety, which one feels most relevant to your situation right now?
So wrapping it all up. Buffett's playbook seems to be about finding good companies, priced below their worth, having the patience to wait, truly getting what they do, not letting fear or greed drive decisions, concentrating on your best ideas, letting compounding do its work, and always, always demanding that margin of safety.
That's a pretty solid summary, and maybe the question to leave you with is this. Reflecting on all that, which single principle, if you really adopted it, might make the biggest difference to your financial future? What other questions does this raise for you about building wealth over the long haul?